America, we just signed a great deal with Japan, a wonderful deal. I am a very good deal maker. You see, you either have it or you don't. And I was born with it. I make deals, the best deals. America's great again. God bless America.
Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks climbed on Wednesday after the US struck a trade deal with Japan, lifting hopes for further tariff pacts as Wall Street prepared for Tesla and Google's earnings after the bell. And on the back of that Japanese trade deal, which is one of the big 7 trading partners we want to get a deal with, stocks were broadly green. I mean, you saw outperformance here in the industrial sector, in the healthcare sector, as well as the financial sector. But tech didn't sit out here. Nvidia was up 2%, AVGO, AMD was up, and this is despite the really terrible earnings we got from Texas Instruments, which was down 13.4%, and that was really it. The only red we saw today had to do with earnings, right? We saw Texas Instruments was red, Fiserv was down 13% on the back of its earnings, and then we just saw some of the defensive sectors take a back seat today, and that was really the trade. Anything defensive, stuff like XLP, right? XLU, utilities and staples, these are defensive, as well as gold, which is a safe haven asset. They took a backseat, and today was ultimately just a risk on day, risk on and rotation into cyclicals, into sensitives, with the S&P 500 gaining 0.78%. A very solid day through and through, and it wasn't just large caps, it was small caps, large caps, mid caps, value, core and growth. Look, the core segment of the market did take a little bit of a backseat right here, underperforming, but net it was very, very solid, particularly in the growth and value components of the market, and then ultimately outperformance in the small cap space. And this just all stemmed off the trade deal we got off Japan. Now, this was a very good trade deal. And the gist of it is that Japan will have a 15% tariff rate, down from the 25% tariff rate initially proposed by Donald Trump. And this was the craziest part of this deal. Japan will also invest $550 billion into the US, and that money will be invested at Donald Trump's direction. I don't know what that means. Also, the US will keep 90% of the profits. I don't know what that means. We need to get a better framework and a deeper understanding of how this deal is structured. But this is a very good deal for America. Japan is also going to open up their country. They're going to buy a bunch of trucks, rice, and other agricultural products. And the fact that Japan agreed to this is a really, really good deal for America in aggregate. Now, there were a couple of critics of this deal. A group representing GM, Ford, and Stellantis are pushing back on the proposed Japan trade deal that would lower auto imports to 15% while keeping Canada and Mexico tariffs at 25%. They argue it puts US-made cars with high domestic content at a disadvantage. Now, the upside to this is that this 25% level is probably going to be decreased to 15% to make the USMCA products more competitive. So we should see that. Over the next couple of days, especially as we keep these deals rolling through. We also got a deal with Indonesia yesterday, a deal with the Philippines. China came out and said their final trade talks with the US will be held between the 27th and 30th of July. Vice Premier He Lafeng to travel to Sweden for discussions. So that's on the way. So I think we're going to get a China deal very, very soon. And the EU and US are nearing a trade deal that will put 15% tariffs on imports from the bloc, in other words, the 27 European Union countries. So we'll see if this deal gets done. However, the EU did come out and said that if a deal is not made, they do have $100 billion worth of tariffs ready to implement on US goods to match the US current 30% tariff rate. So a lot is hanging in the balance. A China deal and EU deal, we really need a strong deal from both countries. If we do get that, I think markets continue to the upside. But it was all good news. We did get some economic data that disappointed. For example, existing home sales came in below the expectation, and we actually saw a decrease of 2.7% on a month-over-month basis. And then looking at some market movers today here, guys, Google was down 2% on the day. A lot of volatility after it dropped its earnings. And to be honest, it was actually a very, very solid report. Total revenues grew 14%. Net income grew 19% year over year. Search up 11%, YouTube up 13%, Google Cloud up 32%. Each of these segments delivered double-digit revenue growth, and Google expects full-year capital expenditure of $85 billion, an increase from its previous number of $75 billion. So the AI trade continues. ABGO rocketed on the back of this news. And guys, we're going to talk about Google's earnings more in depth on the second channel. So go ahead, like and subscribe to FinFluential Media. I'll leave it in the comments below. You guys go ahead and do that, and it will cover Google in depth. Tesla also reported its earnings. There was a slight revenue miss, a massive earnings beat, and the stock was largely flat because Elon Musk came out and said its more affordable model is running ahead of schedule and will be slated for release in 2025 in the first half as planned. But this is a very mixed report. You know, revenues fell 9%, net income fell 16%. The fundamentals of Tesla continue to weaken, and Tesla also now holds $1.4 billion worth of Bitcoin on its balance sheet. So there's that as well. Fiserv was down 13% today, and it reported earnings. Now, it beat on revenue, beat on EPS, but the reason why the stock was down because of guidance. The market was expecting 10 to 12% revenue guidance. The management team just said 10%, and as a result, the stock fell 13% on the back of that. And then we also saw a big mover today. Chipotle Group was down 9%, and that's because it missed on revenue on the back of foot traffic falling for the second quarter in a row, down more than 4% for this quarter. However, the company did beat on earnings, with the market really not liking that. And this is what happens when you get a stock that trades at a 46 PE, a 6 price to sales, and is only growing revenue in the high single digits. You're going to get moves like this. I think the valuation for this name needs to re-rate, especially as foot traffic slows. And as a result, you're going to see revenue slow significantly too. And then for everything we saw today, great breadth, 4,300 advances, just under 2,000 decliners. We saw net inflows in the New York Stock Exchange, outflows in the Nasdaq 100, the S&P 500 gaining 0.78%, and market momentum remains solid across the spectrum of moving averages. So it was a very green day across the market today. Mega caps rallied, but small caps outperformed. The IWM up 1.5%, 2x alpha of the S&P 500, 3x alpha of the Nasdaq 100. We saw mid caps outperform as well as profitable small caps. Growth outperforming value, but both green on the day. Now, the new day for futures just opened up, and we can see some flat trade right here. The S&P 500, the Nasdaq futures, as well as Dow Jones, all pretty much flat, but they just opened, so not much to take away from there. But it was a bullish day globally as well. European stocks, Middle Eastern stocks, Chinese stocks, all up in excess of 1%. Just a broad-based rally, and just globally, the market's really just loving the trade deals that are coming to fruition. Now, we could see here that volatility also fell as certainty about these trade deals begins to materialize. So that uncertainty now gets pushed to the side, and as a result, volatility is going to fall. And the front month fix below the 15% mark. And on the back of that, the S&P 500 making another all-time high. This is on the weekly chart. Let's check the daily chart. The daily chart as well. Absolutely insane momentum we're seeing in the market right here. Guys, remember, never ever. So dollar did 4.21%, and we did see yields tick up ever so slightly, and then crypto really taking it on the chin. Bitcoin down 1.76%, Ethereum down 4.6%. So it wasn't completely risk on today, but I guess we are seeing a little bit of a rotation from cryptocurrency into stocks and real assets. Gold was down 1.32%. Silver flat, outperforming, as well as WTI. But yeah, the whole crypto space just pulling back, I guess consolidating, but the crypto space has run very, very strongly. So a little bit of consolidation would actually be healthy and welcome. And again, Bitcoin does actually lead stocks to a degree. So to see this type of consolidation at here could signal something for stocks maybe in the next 3 to 4 weeks, somewhere around there. But it's not a direct one-to-one correlation. But let's actually talk about the S&P 500 really quickly, guys. You can see on the weekly chart, this is such a great weekly chart when you look at it, man. I mean, you put in a low, higher low, higher low, equal low, new all-time high while making highs along the way. That's some very, very solid stuff. You could see that even though we did see a little bit of consolidation right here and a massive carrot tantrum pullback, markets have proved incredibly resilient. And this is driven by everything we speak about in these videos every single day. Now, hopping on the daily chart, guys, we could see a couple of things. So this is the full chart right here. We're going to zoom in, and zooming in, we actually did see the call wall move up ever so slightly. So it looks like the options market is pricing us to get to as high as the 6,400 area in the S&P 500, especially as we probably break out of this range we've been in. That's a very, very solid candle. Minimal wick at the bottom. A minimal wick at the bottom and the top really goes to show that the bulls took us all the way to the top and we held that level. If we just go on the daily chart, you can see, we did see a little bit of volatility here in the early morning, but the second we broke above this high, right, it was up, onward and upward. We did pull back, use this with previous resistance as support, and then continue to make highs, closing at an all-time high here for the S&P 500. The options market telling us we do have room to go higher. 6180 is still the gamma flip, so there is that. But all in all, we have a little bit of room to the upside, and I think we should get that, especially as we transition into August. But it's not a whole lot higher. We are currently at 63. To get to 6,400 would just mean, 0.7% upside from here in the next week or so. At least that's what the options market is telling us. It's not a crystal ball. It just allows us to assess probability, but that is what the options market is telling us, that we can see a little bit more upside on the back of what has been a very, very strong candle and trade deals coming to the market. And what was really interesting is that the market didn't actually price us in, because if the market had priced the Japanese, Philippines, and Indonesian trade deal in, the market would have sold off. It would have been a sell the news event. So the trade deal coming into today was actually underpriced in the S&P 500, and that is why we saw a massive move up. We've been in the range here for the IWM. Let's actually just go to the RTY really quick. You can see that we've been in this range right here for a while. We've broken above, and that means we can now go ahead and target this core wall, which is 23.25. And if we actually just take a measured move to the top end right there, that would be 1.8%. And guys, if we look at the weekly chart here for the IWL, we're still well off the highs that we made, in December 2024, late last year. If we go ahead, measure that, we're about 8% away from that. And that isn't even the all-time highs. If we actually just zoom out, that is the all-time highs right there. So it's about an equal all-time high, I would say. So we're about 8% from those all-time highs, whereas the S&P 500 just made an all-time high. Now, guys, looking at European stocks, we continue to consolidate at this range right here. Ultimately, we want to be buyers in this, 520 to 530 region. Israeli stocks continue to just power ahead. This is actually such a good looking chart. Higher highs, higher lows, new all-time highs. I mean, it doesn't look bearish. Again, you never want to short new all-time highs. And Chinese stocks, guys, we were looking for a breakout above 35. We got it. Our target now is 38. We're at 37, 32. So, I mean, this is probably the place where you want to start taking profits from your Chinese positions, especially for those of you that are long here from like this 35 region or possibly even under. Taking a little bit of money off the table here wouldn't be proving, but still wait for the upside squeeze to the $38 area for ticker symbol KWEB. Now, crypto did not act well today at all. This is a daily chart right here for Bitcoin. And in aggregate, the thesis is still intact. Bitcoin moving higher. We're consolidating at the upper end right here. So ultimately, if you're a Bitcoin bull, you want days like these. You want days like these so you can accumulate Bitcoin here between the 117 and the 116 area. I do think we are going to go higher. M2 money supply is telling us we will go higher. As you can see right here, we do have a lot higher to go, and it looks like M2 money supply is actually rebounding from these lows. I was expecting it to move lower, but that is not the case right now. So we can still target, the upper end of like 140 or, the high 130,000 area. We are seeing a little bit of consolidation here, but that's completely normal. It isn't a one-for-one correlation. The path is what we actually want to look at. Now, looking at Ethereum, this is not the place where you want to see a 4% down day for Ethereum. The reason being, if we go to the weekly chart, you can see here that this was a very, very strong resistance zone at the moment, right there for the better part of the last 18 months. And what's happening right now? We're seeing strong resistance at the exact same place. That's a win for the bears, not the bulls. Ultimately, what the bulls need to do is push into this area right here, consolidate right, and then move higher from there, or even just push above. That's ultimately what the bulls need to do. If that's not it, if that is not the case, and we do see downward momentum, we are likely going to probably form some form of resistance at this level right here, where you can see a lot of consolidation and chop occurred in Ethereum. And that would be a pretty brutal sell-off if you actually take a measured move. It would be 20% down to the upper end of the range, 33% down to the bottom end of the range right there. So bulls need to step in right now, or things can get very, very ugly for Ethereum. Bitcoin acting much better, but if the bulls don't step in at this moment, if we don't get like a solid green day that actually goes ahead and consolidates here, if we can build some price action and support in this area, ultimately that probably means we are going to continue low. So bulls, you need to step up right now, keep this pullback shallow, and then go from there. Otherwise, things can get very, very ugly for Ethereum in aggregate. Now, guys, I want to talk about a quick stock that I recently bought. If you follow me on Twitter, you know I've been in this position for, I would say, the better part of the last week, and it is acting very, very well. The stock is up very big this week. We had a gap up and go, and I think SEMrush, ticker symbol SEMR, is about to break out. I think we're about to go ahead and tackle some of these levels right here, heading into its earnings, and then we can go ahead and tackle, these highs at the $20 area. I do think the stock is materially undervalued. It trades at 21 times forward, 17 times forward on next year's earnings, and analysts are penciling in a massive move to the upside, as you can see right here. The bottom end target is like $12, which is 22% upside from about the $10 region. The average price target sees 50% upside, and the most bullish consensus estimates see us going back to these highs right here at $18 a share. It would put us somewhere around about there, and I do think we're going to see that because this company right now is cheap, and it just unveiled its latest generative engine optimization tools for AI and LLMs. I think it's going to be a hit, and they have a lot of customers that they can cross-sell to. We can see momentum coming into the stock here on the daily chart. Once we go ahead and start tackling some of these higher levels, the $10.50 area, and some of these resistance areas at the $11 area, that would literally mean we can go ahead and see some of the material upside after the stock fell on the back of the tariff tantrum, as well as some of its earnings downgrades. I think we saw a lot of pessimism at the lows right here, and I think there's material upside for a name like SEMrush at the moment. Guys, then diving into sentiment, this is Goldman Sachs US Equity Sentiment Indicator, which measures stock positioning across retail, institutional, and foreign investors versus the last 12 months, and is significant in predicting future returns. And right now, this indicator is currently at negative 0.3, which does indicate positioning is slightly lighter than it was in the 12 months prior. Historically speaking, this is a bullish setup, particularly coming from the deep lows we saw early on in 2025 right here. As it suggests, the markets and stocks are under-owned, and any positive catalyst could trigger a powerful wave of re-risking and upside momentum. And I think we are going to see that with earnings. Right now, if you look at the full year 2025 earnings, after the peak tariff uncertainty, earnings has pretty much traded flat. And when that is the case, the most likely scenario is we get upside to earnings. We are already seeing that right now. As of July 17th, earnings for the second quarter was at 4.4%. This right here is the second quarter. We now know factually that that number is closer to 7% as it is right now. So earnings coming in significantly better than expected. And like I said, the second you get a catalyst like this, it is going to trigger a re-risking. However, with full year calendar earnings expected to be 8.8% and second quarter earnings at about 7%, where does that leave us with valuation? Right now, the S&P 500 trades at 22.3 times, a little pricey if you ask me, but that is definitely spearheaded by the tech sector, consumer discretionary, and industrials. Some of the cheapest sectors on the block is energy at 15 times, healthcare at 16 times, and financial at 17 times. However, if you exclude the technology sector from the S&P 500, you're looking at an index that's about 18.4 times, right? That's about the historical average. And in fact, you can actually see right here that the technology sector is the major reason why you're seeing the S&P 500. That's not necessarily a reason to get bearish. In fact, tech valuations should be higher because they have a higher return on equity. They're growing faster. They're leading the charge as it pertains to innovation. However, this is telling us that if you are looking at getting into the S&P 500 on pullbacks, maybe looking outside of technology is definitely where you can find some value and potentially alpha in the back half of the year, especially as we get these trade deals, as we get rate cuts, and as the macro continues to prove very resilient. Yesterday, the Redbook Index reported at 5.1%. This is a weekly aggregate of retail sales. The data continues to tell us the consumer remains incredibly resilient. And when we look at Fed fund rate forecasts, right now Goldman Sachs is forecasting the first rate cut to come in September and then one in December again, looking for a total of 50 basis points for 2025 and a number of more cuts up to 100 basis points by the end of 2026. Looking at data for the rest of the week, tomorrow is Thursday, so we will have initial jobless claims. That's going to really drive the market. The consensus there is for 230,000, along with the S&P 500 PMIs. The composite, we're looking for a 52.9, and for the manufacturing and services, 52.7 and 52.9. And then we also get new home sales. Month over month, we're looking for a 10% growth. And then for the full year, we're looking for 690,000 new home sales. With regards to earnings, on Thursday, we have Blackstone reporting before the open, Honeywell, American Airlines, Nasdaq Exchange, Union Pacific. Those are the big names. And after the close, we have Intel, Deckers Outdoors, Kinsale Capital. A lot of big names are still left for this week. So even though we did have some very big names, volatility will still persist. The week still has a lot left in it, guys. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.